Hi everyone, in today's video let's understand the modern rules of accounting using the acronym DEALER. Modern rules of accounting: D for dividend, debit increase, credit decrease; E for expenses, debit increase, credit decrease; A for assets, debit increase, credit decrease; L for liabilities, debit decrease, credit increase; E for equity, debit decrease, credit increase; R for revenue, debit decrease, credit increase. The normal balance for each account, like dividend, expense, and assets, is debit, and liabilities, equity, and revenue, the normal balance is credit. These are very helpful when recording transactions in modern way. Now let's look at some of the examples. Sold goods for cash rupees 12,000. Cash is an asset and it increases, so it is debit. Sales is revenue and sales increases, so it is credit. Journal entries: cash account debit rupees 12,000 to sales account rupees 12,000. Narration is being sold goods for cash. Received commission rupees 1,000. Cash is an asset and cash increases, so it is debit. Commission is an income and it increases, so it is credit. And the journal entry is cash account debit rupees 1,000 to commission account rupees 1,000. Narration is being received commission. Paid salary rupees 3,000. Salary is an expenses and it increases, so it is debit. Cash is an asset and it decreases, so it is credit. Journal entries: salary account debit 3,000 to cash account rupees 3,000. Narration: being paid salary. Withdrew cash for personal use rupees 1,000. Drawings: it is capital and capital decreases when there is a drawings by the owner, so it is debit. Cash is an asset and it decreases, so it is credit. Journal entry: drawings account debit rupees 1,000 to cash account rupees 1,000. Being withdrew cash for personal use. Deposited rupees 5,000 into bank. Bank is an asset and cash in bank increases, so it is debit. Cash is an asset and cash in hand decreases, so it is credit. And the journal entries: bank account debit rupees 5,000 to cash account rupees 5,000. And the narration is being deposited cash into bank. Paid electricity bill rupees 800. Electricity expenses, it increases, so it is debit. Cash is an asset and it decreases, so it is credit. And the journal entries: electricity expenses account debit rupees 800 to cash account rupees 800. Narration is being paid electricity bill. Please like the video, subscribe to my channel and press the bell icon. Thank you for watching.